Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 19th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on. Not a whole lot of economic data, but we do have a couple of Fed governors speaking today. We had Dudley speaking earlier this morning, and we have Evans speaking later on this evening, 7 p.m. Eastern time. Anyway, let's get on to the markets. Got a lot to go over today. We got crude oil futures slightly down on the day, but did come up and test the Fibonacci level that I was talking about, looking for a bit of a bounce here before we start moving down towards that $43 a barrel mark. So I've added an XOP trade on that. I'll talk about that here in a little bit, but looking a little bit bearish in crude oil. We also got gold coming off quite a bit, breaking below the point of control here. I think that gold is overvalued. We got these tweezer tops. I talked about it. It's looking pretty bearish here with that major resistance. Plus, the flight to safety seems to be off of the table now with equities cruising higher, Dow Jones, E-mini S&Ps, or the SPOOs, making historical highs. NASDAQ being a little bit of a lagger right now, but is catching up. And we'll talk about that here in a minute. Bonds up slightly on the day. They were just down on the day when I got ready to start this. Just slightly in positive territory, really getting support on that 200-day moving average. Onto the Dow Jones Industrial Average. This is what I was talking about. This is the actual average. It's not really a tradable product, but as you can see, the market opened, gapped higher above this resistance area that we were talking about on Friday. This value area high should act as resistance, but as soon as you can get through that, you get that little bit of a pop, and as you can see, Dow Jones up 100 points on the day and gapping above the value area high, which was acting as resistance before. NASDAQ up about 80 some points right now. The overall market just blasting higher, piercing through this 9-day moving average. Once you get above that, it's going to look more bullish again. Bulls really want to get above that level right now, so I don't think it looks like it's going to be too difficult as of right now, the way the overall equity markets are kind of sizing up. And this is what I was talking about with the E-mini S&Ps up 15 points on the day, making a new historical high, and very close to the highs of the day. If we look at the breakdown of the E-mini S&Ps, you can see that this all-time historical high was made inside of the day session, so that makes it legitimate, if you will. So we have a real historical high, and that is going to be the line in the sand, that 2450 area. To see if we can get above that. It's looking like it's a pretty good resistance area just because it's a round number. Then on to what I've done. Walmart, I talked about this on Friday in the market commentaries. Walmart, I actually, at the end of the day with Walmart and Kroger, decided, this whole Amazon and Whole Foods thing is a little bit overdone with these guys getting slammed down. It's not like they're going out of business anytime soon. As a matter of fact, one of these guys might actually decide that they want to get into a bidding war with Amazon just so Amazon can't have it. So we're even seeing Whole Foods trade above that $42 area that Amazon said they were going to buy them for. So it's trading about $1 higher than that. And that's kind of giving the rumors that there might be a bidding war for Whole Foods going forward, and one of these other guys could pick them up. And anyway, with Walmart, I went in there, and it was last couple of minutes of the day, I went in and sold the September because I was getting ready for the webinar and talking about our Azo Loco, and so I was in the September. So I was playing around with that and decided to trade this and sold the 72.5 puts for $1.66. Now, usually I want to sell these in a closer month. So when I finally realized that the market was already closed, today I went into the July and sold the 73 puts for 63 cents. So I just wanted to get that trade on also. So I added a little bit to it despite my mistake. I'm still holding on to those Walmart in the September also. So just added a little bit to it. Another trade that I just did right before we went on here was XOP. I got filled on a trade with that pop up to resistance and kind of failing with crude oil. I decided to go into XOP on this bounce like I talked about and sold the July 33 calls for 56 cents. So 33 calls gets me up and above the value area low, so that should act as resistance if it tries to get up there. That's why I decided to go above that level right there. So looking at those July 33 calls for that. And then, excuse me, with Boeing, ticker symbol BA. Now I had on the AABA loco kind of set up for this trade a few days ago heading into the webinar. Decided I didn't want to miss it, but it was right when we were trading right around in here, got this movement. The next, I was getting ready to get out on this day, but this doji kind of made it look like we could be topping out, and I was looking for a little bit of a retracement, so I held on to it for a little bit longer. Today, not getting any confirmation, it's blasting higher, so I just decided to pull the ripcord on it before it really reached a max loss on this trade. And what I had originally put on in here was with the went into the August, and I had bought the 185 180 put spread, and then I sold the August 190 and then bought the 195 call. So it's defied risk, but at the end of the day it happened so fast that the market really didn't go to a max loss immediately, so I decided to just pull the ripcord on this one and get out of it. Ended up getting out for around $2.75 ish. So lost a little bit of money on that one there, but at the end of the day, that I did it really small and didn't hurt too bad, but didn't want to really let it go to a max loss with it not being confirmed on the downside. So more of a technical out on that one than what I usually do with the trading aspect of it. Since I put this trade on with the technical setup, I decided once the technicals were broken that I was out of that one. Now with Kroger, this was another one that I had put on Friday. Talked about this in the webinar as well, just as I mentioned beforehand. And with Kroger, I went into the July and sold the 20 puts in there for 30 cents, bought them back this morning for 15 cents with a little bit of a bounce that we got there. Plus the volatility, as you can see, came out of it dramatically. That allowed me to get out as well for 50% of my max profit on that. Now these are a couple of trades that I'm working on trying to get on right now, and this is Procter & Gamble, looking at doing this Azo Loco. Like to see it come down a little bit more because right now it's trading for a debit. When I set this trade up on Friday in the webinar, we were able to get a little bit of a credit, and got a nice credit on it when I set it up according to the rules and everything else. But then I was able to make my call spread a little bit tighter, which made it so that my risk reward was much better. My risk was half as much as what my reward would be on Procter & Gamble if we got it to come off a little bit. So in the September, I'm working this trade right now, and September I'm working to buy the 85 puts and sell the 80 puts for the downside on that. That's the bearish aspect of the debit spread, and then go in and sell the call spread and sell the 92.5, 95 call spread. So as you can tell, the wings on the call spread are half as wide as the wings on the put side. So when I was looking at this on Friday, it was looking really good because I could get like a 6-cent credit. Today, it's looking like it's trading more of a debit by about 8 cents. So I'm working a 1 cent credit. 'Cause my rules on this are that you do not want to do it for a debit. I'm not going to chase it. Just going to let that trade work and see if I can get that trade, because I actually really want it because of the way the risk reward set up on that is so great. So looking to put on the AABA logo in Procter & Gamble, which is ticker symbol PG. And then another trade I'm looking to get out of is Applied Material. Applied Material, just looking to get about 50% of my max profit on this. I'm in the July 40 puts in there. Originally sold them for 40 cents, trying to get out for about 20 cents right now. It's trading about a nickel higher than that. So get a little bit more of a bounce here in Applied Materials, ticker symbol AMAT. Then I'll be able to get out of that hopefully by the end of the day. So looking to get out of that one as well. The other one, XLK. This is the technology sector. Kind of goes lockstep with NASDAQ. Remember when it came down and was testing this trend channel, if you will. Got a little bit of a bounce today, so I'm looking to try and get out of this one. XLK, I have on the July 54 puts in there, and originally sold them for 65-ish cents, and I'm trying to get out for 32 cents. It's trading about 37-ish right now, so just kind of working that out. A couple working orders in there. And a couple other things to talk about right now is YHOO. YHOO, remember they sold off major assets basically to Verizon, and basically Alibaba kind of scooped them up. As you can see, this ticker symbol is no longer. So as of Friday, we are not going to have YHOO as we knew it. Now it is trading under the, it's trading AABA. So it's kind of like a twist on Alibaba, and the ticker symbol is now going to be AABA. All right, so as you can tell, one day of trading, so pretty big range. But just so you guys know, it is no longer YHOO, it is AltBaba. I don't even know if I'm saying that right, but that's what it is. It is what it is. Just so you guys all know, you can take YHOO off your watch list right now. It's pretty interesting to go in and look at the options on it. People in there still have options trades. There's zero bid at like $4.75, because if you're willing to pay $4.75 for it, somebody is going to be willing to sell it to you. Anyway, so don't make that mistake. Make sure you take it off your watch list and don't get involved in that, all right? Because it would be definitely a losing trade. All right, so that's about all I got for you guys today. Friday's webinar went off really good. If you didn't have a chance to go check that out, it's a really good strategy. There's a lot of ways to play around with it, like you saw with me playing around with the Procter & Gamble, show you the ways to set that up to increase your probabilities of success, because if you set this strategy up wrong, you're going to be setting yourself up for disaster in a sense, where you have to make up a lot of ground in order to make up for the misappropriation of those strikes. All right, so go check that out at protraderstrategies.com, and if you can't take that, take it easy.